Bitcoin really looks like it is set to test the all-time highs and maybe beyond. And there's a lot of bullish news to support that. Obviously, huge ETF inflows, but most notably this week, will Bitcoin and crypto assets on US-based exchanges be counted towards your assets for a mortgage? These are just a few of the stories that we have here. NLW and I are going to unpack it all here on the Friday Five. Let's go.
Let's go.
Big week for Bitcoin. Last Sunday, we were under 100,000. We were obviously going to 5 or 10,000 or something much lower. And then the week ended on Sunday with a much higher price and price pumping throughout the week. We're going to unpack it all here. Bitcoin really doesn't seem to want to go down.
No, it's I think that it really loves this this $100,000 level. I feel like recently it's decided that 105 is its number, and who knows, maybe we can go a little bit higher from here.
Yeah, usually when you get that kind of sweep of the lows on the chart, you go up and test the highs, I think. So a lot of people looking for that 110, 112 is sort of the next test, assuming that we get there. Obviously, all of this coming alongside Trump saying that we have a trade deal with China, the ceasefire in the war. It seems that we've cleaned up a lot of the macro, at least for now, temporarily.
Yeah, I mean, look, in the time since we were last doing this, in the 1 week, we had the U.S. enter the war, a ceasefire that didn't really hold, and then a ceasefire for real. And so, I think that part of this is also just, the markets continue to fade macro events to some extent. Like they can't have no reaction, but they're very clearly in the, coiled and ready to go back as soon as things look better again. And they were validated one more time, at least apparently, in the short term. So,
well, the NASDAQ 100, the Qs made an all-time high. The S&P tapped the all-time high yesterday and closed just inches below. Coinbase made its first all-time high since the IPO. So markets clearly not scared of what's going on. But let's dive into what I think is clearly the biggest story of the week. Fannie Freddie ordered to find ways to count crypto as an asset. You can see the tweet here from Pulte. After significant studying and in keeping with President Trump's vision to make the United States crypto capital of the world, today ordered the great Fannie Mae and Freddie Mac to prepare their businesses to count cryptocurrency as an asset for a mortgage. All caps. So ordered. This is huge.
Yeah. Apparently, Trump is also giving tweet school lessons too to imitate his.
I'm surprised at the end he didn't
style.
say thank you for your attention to this matter.
Exactly. Random capitalizations. We got it all. No, look, this is obviously this is one of those things that's like a great news, like good story. Not sure how much impact it's going to have, broadly speaking, in aggregate, is going to be hugely meaningful to some number of people, right? This is going to be transformatively meaningful to I don't know if it's a handful, I don't know if it's more than a handful, but it doesn't really matter. I think that the point here is this is a thing that should very clearly be policy. I mean, it's just very obviously these assets should count towards your net worth when it comes to a consideration for these types of loans. It is, I think, an example of what will be seen as the mega trend of this cycle, which is just the full integration of crypto and Bitcoin into the financial system as it is. So it's great news. I do think it's funny. Another example of a story that, had it been, a year ago or 2 years ago, would have been, the biggest thing for weeks, but now is just sort of de rigueur and part and parcel of kind of the transformation.
I mean, it's highly logical, as you said. So this should have never really been under debate. There's also some caveats. I believe it's right now maybe only on Coinbase, but United States registered exchanges. So if you think that they're going to start looking at your MetaMask wallet or your self-custody to count up your assets, that's not going to happen. Also, I've seen a lot of terrible takes with people saying mortgages are going to be backed by Bitcoin. No, right? What this means is that if you require proof that you have the amount of money needed for a down payment and the reserves required for your mortgage. So if, let's say, your mortgage is $10,000 a month, they might want to see that not only can you afford that $10,000 a month, but you also have an additional $60,000 or $120,000 a year's worth of payments in reserves, they generally count your stocks for that. They will not look at your crypto right now and count that as an actual asset that would be liquid for your reserves. That is now going to happen. So it's really about the size of your net worth and the assets that count towards your down payments and your future mortgage payments. It doesn't mean that they're going to give you a loan on your Bitcoin with a yield, with a interest payment.
Correct. And I think that so then to the extent that you are still opposed to this, the only plausible argument is you think that there's a higher risk that the volatility of those assets is such that they're more likely to go down from the value when measured than when you would need to call upon them, which is a more reasonable critique, I guess. I think it doesn't really, hold water with where things are now. But isn't there also going to be they're designing a system so that it's not like your fart coin counts the same way as your Bitcoin is going to?
It should, though. It's fart coin. I used fart coin bags. I don't have fart coin bags. But yeah, also there's precedent for not counting them entirely. Like retirement accounts will count towards your reserve, but I think they'll only count like it's either 40 or 60% of a 401k or an IRA because there's penalties to cash out and you can't cash them out immediately. So maybe they'll just basically put a discount on your crypto assets as they explore this. I think it would be reasonable. If you're holding Solana in a Coinbase account, it's reasonable to think that could be down or up 50% in 6 months to a year.
Right. It's so the other interesting part of the conversation has been around basically, the idea that they're only interacting with US based exchanges, right? And so some people have, kind of taken that to task for it not being self-custody. There's precedent here, right? Cash is legal, but they're not going to count, the bag of cash that you have under your bed as part of this.
I have screenshots. I took pictures of it.
It's right. And look, I think that to the extent that it is an indication of a formal disavowal of the value of self-custody, that's one thing. But obviously, the administration and crypto allies in Washington right now show no indications that that's the attitude. This is just a mechanical need. The other interesting theory that I think is not an insane consideration is a way to basically like a sort of secondary benefit of repatriating crypto assets that are on non-US exchanges because they're not going to look at Binance, for example, if
they're going to send the money to their Coinbase account.
Exactly. And so, I don't think this is a tinfoil head thing. I don't think it's even sort of like the major intent, but I also wouldn't be surprised if it's like sort of, again, like a secondary benefit that just, happens to be in line with US as crypto capital of the world. I mean, which he put straight there in the tweet.
As you talked about that, there's some more interesting nuance as someone who's gone through the mortgage process, being a crypto guy multiple times, is that they usually have to season all of your money for your down payment and for your reserves as well. So you would have to do that many months in advance, and you would have to show exactly where it came from for them to track the money for KYC, AML, to make sure that you're not money laundering and all of those things. So that is a major secondary effect. If you are repatriating it, they're going to know where it came from. You're going to have to account for it, and it's going to be tracked.
Yep. Which, I mean, by the way, if there is then another,
if they're doing something legal, who cares?
Right. But then, I mean, and look, if there is then another line of, more reasonable critique, let's call it, is from the extreme opposite side, which basically, that doesn't want all those restrictions placed on how people interact with their crypto. But look, it's pretty hard to argue that net is not a good thing. And so, we'll plant the flag there, I think, and probably move on.
Yeah, let's move on to the second story, which is BIS says stablecoins fail as money, calls for strict limits on their role. What a shocker. BIS says stablecoins fall short on key monetary principles, warning of financial crime risks and threats to monetary sovereignty. These were the three things they said it fundamentally fails on: singleness, elasticity, and integrity. Okay. First of all, what's singleness?
Isn't singleness just a different word for fungibility, basically?
I think so. Singleness.
Yeah. Yeah, I mean, look, the jokes write themselves with this one, right? Central bank says central banks should continue to be in charge, kind of a thing. I think what's interesting and new about this is, I've been watching the BIS statements around stablecoins and crypto in general for quite some time. This is a statement that is anchored in the reality that we are living in now, which is that stablecoins are a force, right? This is no longer a discussion of future hypotheticals. This is a sort of a forced consideration based on the engagement with stablecoins and the excitement around stablecoins. So I think one, it is a reflector of change in the position of stablecoins in the global system. Two, the big, huge, grain of salt, bag of salt that you got to take with this is that the BIS is all in on central bank digital currencies, right? It views CBDCs as sort of the chosen version of the future monetary system. So there's basically no disagreement anymore around whether blockchain-esque type rails are going to be a better system to move money in the global financial system on. It's a question of who controls them, and the BIS obviously is interested in central banks, who are their main customers and clients, being the ones who control them.
Bank for International Settlements. Isn't this the organization with the huge guy as the head of it?
Yes. The absolute unit, as people like to call him.
Guy is an absolute unit. I can't believe I'm blanking on his name. It's important, but definitely
Augustin Carstens.
Augustin
Carstens.
All right, perfect. Now we move on to the third story, because I can't even think about how dumb that last story was. We've got Bitcoin dominance hits new high as hopes for altcoin season fade. You take a look at the chart. We can get rid of that line right there. But this is going back, months and months and months and months. If you look here on the daily chart, and Bitcoin dominance has done nothing but go up, making a new cycle high. I mean, we're talking about highs back to, I don't even know, back to 2021, January. So it's been all Bitcoin all the time. And I think the story here is not only the legitimacy of Bitcoin and it becoming a asset that's in most portfolios, but the fact that crypto adjacent stocks are just crushing altcoins as well.
Yeah, I mean, there's two parts of the story. One is big themes are Bitcoin and stablecoins, and that's very, very clear. The second is, to your point, that the casino has moved to the big show, and Bitcoin treasury stocks and all of these things are where a lot of that historic alt season energy is going right now.
The big show. I like that. This is just absolutely brutal for anybody who's been holding any altcoin, basically. I mean, you get these random outperformances. We get those moments when there's kind of a pop. But even as we see significant inflows into Ethereum ETFs and such, it just can't keep up. It just can't.
I don't know.
It's going to change.
It's interesting. I think that the some of the patterns of historic alt seasons were basically predetermined before we ever got to those alt seasons. The big one for me being that crypto VCs have always had an incentive to back some newer, flashier thing, because of, if you can turn something into Solana, right, you can make an absolute boatload of money if people actually start to move behavior to that base chain. And that sort of pattern has been broken, I think, pretty aggressively. Now, not to say that Sui and a couple of the others aren't sort of picking up some amount of traction, but it's not the same, right? Solana was the Solana for this cycle. It has and I don't think that that's a bad thing. I think that a lot of the excesses of alt season were these sort of like predetermined patterns that were mostly about financial engineering and who gets who got in early. And it doesn't bother me all that much if some amount of that is starved out. I don't think that it means that there's not going to be altcoins. I think that they're going to have different, actual different purposes that are meaningful, or be on the other end of the spectrum, completely memes and no one cares. And honestly, that divide, where it's you're really just a meme and a narrative and a story, or you're actually something significant, is pretty okay with me.
I agree with all of that. It's just interesting to note that the financial engineering has now come to the stock market, because Bitcoin treasury companies have just found a much bigger and better way to financial engineer massive gains. So we'll see who holds the bag at the end of that, because we know it only ends with somebody holding the bag.
Yep.
All right. Now we've got a story that would have been the biggest story in history, but here we are in 2025. Texas Governor Greg Abbott signed strategic Bitcoin reserve bill into law. I'm old enough to remember when people cared about strategic Bitcoin reserves. We've got a couple of funny tweets here. Texas is already the home of crypto mining. This session, Texas should become the crypto capital. Texas wears the crown as the Bitcoin mining capital of the world. That was from Greg Abbott already last year, and obviously making a bigger move now. But I just love this one. Breaking: Texas Governor Greg Abbott spotted driving home after signing historic Bitcoin strategic reserve bill into law. By the way, you could just have a car doing that in Texas on any random day, but I think we'll take it. But listen, I mean, not only is Texas one of the largest economies in the world, 7th or 8th, including all the countries, right? But as he said, they've been far forward of everybody else with crypto in general. And this is the 3rd state to approve something like this, but the first that's actively has a plan to buy Bitcoin.
Correct. That's the big difference here. You've got sort of a symbolic New Hampshire live free or die bill, which is great. Obviously, they're got to get there, and then the Arizona bill, which is very, very kind of proximate treatment for, or similar treatment for, crypto assets as for other seized assets, kind of a bill, right? Definitely not a full-throated endorsement of the sector. This one is a full-throated endorsement of the sector. It's Texas wanting to go appropriate and use funds from other sources to buy Bitcoin and find ways to buy Bitcoin. It's a Bitcoin buying bill, in a way that the others haven't been. So hugely differentiated in that way.
So I think it was, from what I saw, 10 million or something up front. So obviously
Yep.
not a huge amount, but at least it's opening the door, assuming it goes well. We know how once you get into Bitcoin, you don't stop buying generally.
Yeah. Yeah. The starting point is definitely symbolic. But the openness to an intent to move forward is, I think, the big thing.
Yeah. And so kind of the final story here, which I think leads into tokenized stocks in general, is that we have tokenized shares in Elon Musk's SpaceX coming from Republic. So this is obviously interesting that we're getting tokenized shares of stocks being traded, but this is private. So
Right.
SpaceX isn't like something you can go out and buy at Charles Schwab at the moment. So that's big. And I think just to sort of wrap that up, we have Bybit launching global stock trading with USDT. We've seen Coinbase has applied to offer tokenized stocks. We know that that's the future of Robinhood. I have actually an interview with Vlad coming out on Sunday where we deeply discuss that. Tokenized stocks are coming. So maybe we talk about that first, the progress there, and then the fact that now you can buy private companies to tokenized offerings.
So you can sort of buy a very tiny amount of of private companies, a little bit up until they reach their limit, is actually perhaps a more accurate way to say it. So look, I think what's interesting to me about this set of stories is it feels very much like tokenization of existing assets is the 3rd leg of the Bitcoin stablecoin stool of this cycle, right? Of the financialization of crypto. And it's, if you go back when we were in sort of depths of the bear market and people were keeping themselves warm by imagining what the cycle, themes might be in the future, real world assets, where it was all real world assets, right? Tokenization of real world assets is a big sort of blinking, hopeful theme. And so, you sort of had then this shift over into a focus on Bitcoin driven by, the Bitcoin spot ETFs and Larry Fink coming in. But you remember that when BlackRock made those announcements about the Bitcoin spot ETF, Fink was frequently put on the spot trying to kind of get him to, do the old standard divide between Bitcoin versus blockchain. And he really blew it up. One of the things that was notable is that he was sort of singing Bitcoin's praises in Bitcoin terms, but then also basically saying that, of course, the tokenization of stocks and real world assets is coming. It would be insane for it not to. It opens up so many opportunities, and that they were, thrilled about that too. And now we're kind of starting to come to the part of the cycle that is where there's going to be more experiments in that, right? Bitcoin is a theme. Stablecoins are obviously sort of off to the races as a theme, and this is the 3rd of those. And so it doesn't surprise me that we're starting to see more and more activity around that area.
Yeah, I think it's hard to sort of assign a timeline to this. Maybe it's going to come after we get more clarity with market structure. I don't know. And we're saying that will be hopefully composed by September. But if the United States government saying a market structure bill will be composed by September, I expect it to be a few months later than that. But this is definitely going to be the next thing, assuming they can push it through.
Yeah, I mean, so bringing this then to the Republic story shows how much this set of opportunities is really going to require new and different regulations for it to work. So basically, the short of what Republic is trying to do here is they're trying to use crowdfunding exemptions to offer up to $5 million worth of a proxy for, these private shares in companies, starting with SpaceX, where you can only buy up to 5,000, and they're sort of vague on exactly what it'll be backed by. Some, the maybe secondary holdings of that company. The way that you can redeem it or sell it is going to be weird. Like it's very convoluted structure. I don't think people think that it's a particularly good product, except insofar as at least it's trying to pave the way for more interesting things. But when you dig into the details, it is very clear that this is not a thing that's easy to do, and you're kind of contorting yourself to work around regular or existing regulations, and that I think is reflective of just how much is going to need to be opened up by a shift in regulations for this to actually take hold.
Yeah, I think that's the main point, is that as bullish as things are, as positive as the government is, as favorable as the regulatory and legislative situation is, they still actually have to make the rules.
Yeah, exactly. But, the more that the market tries to contort itself from legitimate actors with these things, the more it shines a light on, this needing to happen. So, there's still a pretty long list of regulatory issues we need to work our way through. But, at some point, the set surrounding these tokenization issues will come. And I think that they will eventually be dealt with because, I've always felt that Wall Street, when it is allowed to, mess around with tokenization, it's just going to be a complete bonanza, right? That the variety of products that they'll get to, approximate, invent is just, it's a dream for a lot of these shops. And, there's going to be pressure for the government to adopt
Now, yeah, we have altcoin money and institutional Bitcoin money now flowing into Bitcoin treasury companies and crypto adjacent stocks. The next thing will be when all of that money, that bubble pops, and it will flow into some sort of tokenized Wall Street scheme. That's my next prediction.
100%.
What a time to be alive. Dude, were you at permissionless?
I was not. You can see the reason I'm in
Basically your
Bard's house is because I was traveling and on the road. So
I figured I was there for one day, and then as I was leaving, I was like, I bet he was here. As I was, getting the breakdown emails.
Yeah, right. Yeah, no, unfortunately, the timing didn't align. Is a little bit of a miscommunication, but the event looked awesome. The Blockworks has always done a killer job with events. I got to say though, permissionless is great, but I love the sort of the more institutional focused conferences they do. So,
yeah. Permissionless was shockingly more casual than I anticipated. I had not been to one of them before, but it was definitely like, cool hangout with speeches going on stage. It was a really great vibe. And I saw that they got Dennis Rodman on stage somehow after I left. So that was pretty funny.
Love it.
Dennis Rodman. Why not? Do it in North Korea next time. All right, guys, that's all we got for you. Check out NLW and the breakdown, of course, and the formerly known as Blockworks newsletter, which is now the breakdown newsletter, which I absolutely love. And we will see you next Friday. Thank you, man.
Right on. Later.
Let's go.